Deven Choksey as well joins in to talk about what he's feeling about trade and how the year ahead is likely to be. Deven, hi, good morning. Firstly, wishing you and your entire team at KRChoksey a very happy new year from all of us.
Thank you, and wish you all a very happy new year as well. And I think may this year bring a lot of prosperity and peace to all of us.
Okay, amen to that. But Deven, soon we'll have the auto sales numbers as well for the month of December trickle in. Do you expect that it's going to be another sedate and very somber reportage that we're going to see from Motown all across, two-wheelers, CVs, PVs? Or do you think that there could be a marked recovery this time?
So Asha, I think as we understand from various companies, I think the inventory position in this particular quarter, December ended quarter, has remained, I think, an overhang for the industry in general. We have been talking about the inventory positions coming in from likes of Maruti. We have been talking about inventory positions coming in from even the two-wheeler companies. And that's the area where I think you probably would like to remain a little bit, play a little bit safe at this point of time. Because I think this spillover of the inventory is likely to happen from December ended quarter to January-March quarter, wherein I think you are likely to see the discount increasing and probably I think clearance of the inventory taking place in this particular quarter. Should that be the situation, then probably I think we'll have to wait for a couple of months, I think, before which we see actual rise in the demand. It is expected that the auto companies would probably have their improvement in the offtake once they go closer to the election, when I think they start seeing the larger amount of offtake for all range of vehicles, particularly starting with the commercial vehicles and going up to the two-wheelers. So I would think that I think we'll have to wait for at least a month or so before which we start seeing the actual rise in the demand happening into the system, and then probably clearance of the inventory. But till that point of time, December ended quarter as well as I think the beginning of January to March quarter 2019, we are likely to see the overing of the higher inventory in the auto space, and I think that's where we'll have to play a little bit more careful in buying the stock. Companies like Bajaj Auto could be slightly exception in this particular space in the two-wheeler, largely because of the fact that they have been added with the advantage of higher exports, at the same time better realization due to the rupee value, and also at the same time I think the company has been systematically progressing well in cornering some of the entry-level market share, as well as I think their higher range of motorcycles have been continued to probably command, I think, relatively stable market share in this environment as well. So likes of Bajaj Auto will be a differentiator, but otherwise I think more or less you will see the overing of the higher inventory for majority of the auto companies in this particular quarter.
Alright, now the first pre-open rates, they are not material at all, but the first pre-open rates for the year 2019 on your screen now, 13 points higher for the Nifty, 69 points higher for the Sensex. I mean, the pre-open rates on any given day are irrelevant, and on today's session when it's the 1st of Jan 2019, they are even more irrelevant. So the first rates on your screen, the money market is open, and what a print on the rupee, 69.69, a nice little rhyme to that rupee number. 69.69, way below 70 now. 72.5 has become 69.9. And the interesting bit here is that even though rupee has appreciated, there is no very large decline which has kicked in any of the IT stocks per se. Deven, yesterday a circular came from SEBI that derivatives need to be settled physically now. Now you've argued in the past that, it's high time, that end of the market needs to be fixed. So if you have to simplify this for our viewers, what it means?
Nikunj, I think this is probably a very long awaited measure coming in from the SEBI side, and I think this indication is a powerful indication. I would not know, I think, the actual scheme of things as far as I think how they want to settle derivative contracts in delivery. But my strong reading says that I think unless you clear the market lot system out of this particular derivative market, even the delivery settled derivative market will not be helpful to the market in general, because it will extend volatility. And if I want to, I think, probably explain this a little bit more in detail, on one side you are forcing people to continuously, I think, operate on a minimum market lot size, and that too I think you want to take it to, I think, the higher levels of 5 lakhs and 10 lakhs eventually. According to me, I think this unnecessarily creates, I think, too much of pressure and the volatility, including, I think, the rollovers, I think, during which you see the sharp increase in the volumes, which is not genuine volume. currently India markets on a cash market turnover to the derivative market turnover ratio, if you look at, we are probably trading at the highest level in the world economy. And even if you convert, I think the delivery based volume to the derivative market turnover, probably I think we are among the most highest in the world. So from that perspective, we should be called as one of the speculative most market in this particular world as far as I think the derivative contract goes. And that's where I think the role of the delivery settled derivative would take place. Typically, a genuine investor, the long only portfolio investors like mutual fund, PMSs, insurance companies, pension funds, HNIs, I think they would probably try and get the advantage of delivery settled market whenever I think they would have the position working for them on the hedge side or on the leverage side. Probably I think delivery settled derivative market would work much favorably in this kind of situation. Over a period of time, according to me, should they bring down the or should they remove the market lots, then probably even the volatility into the market would significantly come down, and that's where you will see the true market emerging hereafter. So I'm really hopeful and want to read the scheme of things before which I can make any specific comment on the subject. But this is a welcome move, long awaited, but nevertheless I think it is now happening. So it is definitely welcome from the perspective of long-term investors.